Welcome to Trade Delicious's Bulls vs Bears, where the investing market meets gladiatorial combat in a battle for all bragging rights. Our contestants will be armed with a hefty $100,000 starting capital, a leverage 1 to 10, and be given a single electrifying hour to out-trade each other. Their weapon? Real-time market data. Their battlefield? Designated assets via the hosts. But be careful, traders. A maximum drawdown of $5,000 stands as a pitfall you cannot afford to tumble into. And remember, this is a game of wit and skill, of strategy and performance. There will be no copy trading and no EAs allowed. You must stand your own ground. And to our viewers, you are the arena crowd, watching every strategy unfold live, every decision that has consequences, and every moment bringing these traders closer to victory or defeat. This is not just a trading game. This is Bulls vs Bears. This is the thrill of the financial arena right here on Trade Delicious. Let the games begin.
You've got to sing a song.
Literally a song.
Any song.
I drove here listening to Bed and Meets Evil. That's Eminem and Royce the 5'9".
No.
Hey. It's a beautiful...
Traders, welcome back to another episode of Bulls vs Bears. I am here with the wonderful Fivers trader T, and of course Michael from TradeThePool has returned once again, and they're going to go head to head for another 60 minutes of trading as we do here at Bulls vs Bears. Now, what's really interesting, T is exuberating with confidence because of course Michael is a stock trader. He's been thrown in 60 minutes FX trading. Guys, I'm just going to start the clock. You guys are free to trade, and then we're going to absolutely grill and question you. So traders, 3, 2, 1. You are free to trade.
Let's go.
It's funny because when I told Mickey that we wanted him to do it, and he was like, "Oh, can I trade stock?" No, it was like, "Oh, I want to trade indices." He's like, "That is not how it works. I'm afraid we will have to do a stock.
100%.
Bulls versus
season 2.
We should do that. That's good. And there's a big community of stock traders with TradeThePool, obviously, because it's a stock trading prop firm. But why don't we start with actually Mickey? Tell us what TradeThePool is, since we're going to plug TradeThePool on here as well.
Are you trying to get me off my comfort zone and
we are
focusing on my trade?
We're also going to plug TradeThePool while we're at it. So, what is TradeThePool and who's it for?
So TradeThePool focusing for stock traders, a prop firm, as you mentioned. Mm-hmm. And, a lot of stock traders don't have enough capital to trade on. It's not like in Forex when you can open an account with $500 or $1,000. In this case, you need, for day trading specifically, you need that $25K to day trade. And basically, we got you covered on that. We'll give you a lot of buying power. Obviously, when you're not trading your own capital, the mentality and the emotions of the money is a bit different. Mm-hmm. And also, we have risk control in our system. So, to protect you from blowing your account in one trade. Going pretty good, guys. Are killing it. We just had a guy withdrawing 20K.
Two people 20K?
Yeah. One didn't withdraw yet. So he's in profit, but he will probably withdraw it this week. Yeah. And the guys are killing it, definitely.
Withdraw. That's the idea.
I've got to ask, Alex, how much money did D slip you under the table there? Because the concentration coming from T while Michael was so distracted explaining there was incredible. Did he slip you a $5?
A $5? I don't know, but I remember in Traders Day Live, he was like, "I know I'm going to come on Bulls versus Bears, so if you do, you got to sort me out." That was a couple of months coming, so now I got the opportunity to finally do this. But
what I find most interesting about T being here, he's the first trader we've had who's trading on a Mac.
A Mac.
He's trading on a Mac. I feel a little bit sick. But
What do you mean? I trade on a Mac at home.
I
trade on a Mac. I can't PC. I don't have a PC at home. You know, what can I say? Less virus on Mac as well.
Shocking.
Yeah.
Shocking.
We're not all perfect. And actually, that is let's have a look. Yeah, the MT5 on Mac though is pants. But you don't really need
it's not too bad. You get used to it. It's obviously there's a few tricks that you need to learn to make it run more smoothly or efficiently, but aside from that, it's it's not as good as the Windows version, of course. So yeah, we have to make do with what we have.
I don't know why trading platforms are just not Mac friendly. Like I don't like.
I have to agree with you.
Yeah, but this is why they developed web platforms as well. You know, specifically for that.
That's a good question. When are we getting web for TradeThePool, Mickey?
Well, I mean,
that's a good question.
Like, Apple's not designed for investing platforms because people who are buying Apple products aren't money smart, are they?
Hey, whoa.
Hey, that's a bit harsh.
We like quality products, you know, things that actually work, except for the headphones that Mickey was using earlier.
It's working perfectly. I've been using them for the last few months. Perfect.
I gotta say though, I did get those. I did get the Max, the Pro Max. Feel like a bit of an idiot because they sound the exact same as every other headphones. But you know, sometimes you just gotta go with just like I don't know. I'm trying to
whatever you say.
Myself it was a good purchase when it really wasn't a good purchase.
Right, let's focus in here. T, you've pulled the trigger on two positions: US dollar, Japanese yen twice, and the Great British Pound, US dollar. You've got 3 lots open here. Why don't you tell everyone watching this a little bit about yourself, a little bit about how you trade and where you are in your trading journey?
Sure. Let me just add my stop loss.
That's what we like to see. Good risk.
Not that it's going to get blown through at any stage.
That's
okay, so
Fivers traders.
Yes. So a bit of my background. I've been trading now for about 4.5 years. Mainly forex trader. Don't really trade indices and commodities so much, but I will actually. I'm going through a revision of my trading plan, so I will start including more markets. But primarily, I'm a forex trader, major trader. So I'm normally on the majors. GU, EU are my main 2. And then you've got UCAD and UJ and a couple of the others. Experience-wise, I've recently passed the high stakes with the Fivers. Did that a couple of months ago. I am taking a few other accounts with the Fivers, other accounts bootcamp, and I think another high stakes as well. So trading wise, in what I'm doing or what I'm looking for this morning, I've got 3 positions open, single lot positions. At the minute, it's just playing off the one part of my strategy is playing off the imbalance zones, fair value gap, some people might call it. What I'm looking at on UJ, as my chart is currently on there, is just targeting this 4-hour imbalance gap with what I perceive as an order block as well. Part of my strategy is just normally going off the lower time frame executions, but sometimes I like to scale in. I'll take a larger position to begin with. Then if it goes my way, I'll drop it down to the 5 minutes, possibly the 1 minute, and look to get any continuation orders more or less off the same kind of price action. The price action, I believe, is fractal. So the way I trade, whatever I do on a 4-hour, I can just drop it down into lower time frames and just look for the exact same situations, but just considering where I am on the higher time frame in relation to where I am on the lower time frames as well. So meaning if I'm wanting to take sells, I would be looking for sells at the highest points of the range, as opposed to selling at the bottom of any particular range that I'm looking at. So couple of positions, the 2 positions on UJ. Stop losses are, I'm taking, or my max stop loss on any position is going to be about $1,000, so 1%. The reason I've taken 2 on UJ was just a simple miscalculation, in the sense of the 2 stops together will be about just under or just over $700, which is fine. If we go back to GBP USD, where I've taken a long, and once again, a similar format, playing off the 4-hour. In this case, it's a 4-hour order block. And once again, getting in, scaling in with a larger position, then I will drop it down to 15 minutes, maybe 5 minutes. If we go with the 5 minutes, I will be looking for any positions I can add on. And so far, it's looking comfortable, so I will be looking to see if in the next few moments to try and take another position. Current stop loss on this is 500, so I'll be looking at another position with possibly a 500 risk to give me a full 1% and almost 1% on the other trade as well. So that's what I'm currently doing at the minute. I will be flicking through the other majors.
Solid plan. I actually like it. Is it safe to say you trade similar to the ICT kind of concept, kind of trading?
Similar.
We got an ICT concept trader in the house.
Similar. I have learned ICT concepts. I would class myself more as a supply and demand. Nice. And price action, in the sense of just literally following the trend. If you do it, or I try to align it as much as I can on the different time frames. So I'm always buying at the extreme levels, or selling at extreme levels, and utilizing the imbalance gaps or fair value gaps as well. I do have different trade and entries for order blocks, or engulfing patterns, whatever we like to call it. As well as imbalances. I do have a multitude of different entries I like to utilize just on the price action, and sometimes it does align with certain concepts, ICT, supply and demand, wick off, and anything else that I've covered in the past.
Beauty. Let's first of all, if we ever need someone to explain anything trading wise, I think we can just put T up there. We might just head out and just let him do his job.
Very good. Like, very, very precise, clean. It was like
it's
for 5-year-olds, you know. So fair play.
Yeah, my background is analytical, so anything I've learned in the past, I've always tried to dive right down to the key founding blocks to literally understand it. And I have done a bit of teaching or presentation through trading, and other people seem to comment on the same things, that they like my style. They seem to grasp what I say pretty much as clearly as I think it, which is sometimes difficult to translate what you're thinking into words that other people can take on board.
That's beautiful. I mean,
yeah. Sorry, Jordan. Before when are you releasing your course?
Not so much a course, it's more an ongoing mentorship, because I like to see it as, when I was getting into trading, I didn't really have anyone that could look over what I was doing, look over my trades and say, hey, maybe you should learn this, or maybe you should look into this, or maybe you should add or take this away. And that's what I've done with a few people that I've worked with in the past, in the sense of, especially if they're new to the industry, I say, hey, this is what you need to cover to get the basics. And then if you want to advance, then learn this, or drop this, or manage risk this way, and so forth. And that's what I do in a sense. So it's more like an ongoing mentorship, partnership way that I've done things in the past when it comes to trading.
Good stuff. Like it.
Beautiful.
Love it. Amazing.
Yeah, I was just gonna say,
yes.
Sorry. What I really liked is we asked a simple question about how you trade, and you give us a rundown of the exact risk you have on the trade, where your stop loss is, everything's really clear. But I want to take a bit of a turn. This is a competition, right? And your whole aim is to beat this man over here who's been silent for about 10 minutes. How are you feeling about going head to head with Michael?
Well, the fact that he's been silent for 10 minutes and I've been sitting here discussing things with you guys, I'm not even looking at a MetaTrader right now. I can see it's all blues, which is good for me.
It's always a good sign.
but I need to dive in and actually see what's going on. But Michael, I know he's a trading style. Obviously, he doesn't know me, but I've analyzed him over the years. He's big in the stocks, TTP. I know he's a fish out of water right now, so I'm hoping that will give me a little bit of an edge. And I know that his time duration is probably longer than well, he's a day trader on the stocks.
Yeah, Mickey's in and out. Mickey trades.
Yeah,
I'll let Mickey tell us how he trades. Instead I'm speaking for Mickey. But go on, Michael. Let's have a look. I want to see Michael's charts. Let's have a look and see where he's at.
Oh, it's far in position.
Well, okay, you getting
Started.
Well,
Just started.
jumping in like that.
Look at this guy.
All right.
Touching the water, testing the water.
Testing the water with about $400,000 worth of positions.
Man, you gotta go big, Jordan. You gotta go big.
No, big was Rubin. Big was Rubin going 10 lots in the first moment, which actually
10 and 15 lots straight off the bat. That was big.
So yeah, I got a couple of trades going on here. Mostly coming from the hourly chart. So the timing on the 1 minute chart wasn't that great, but I have limit orders waiting in the system. So for example, dollar yen. So that's a nice that's a nice area that I'm looking for. Basically, just a nice retest to those levels. And from here, basically aiming to the next drop, reaching probably those levels. And if I'm going to the 1 minute chart, I have a lot of limit orders waiting because my entry was right here. And that's not the classic entry that I would usually take, right? I would wait for the bounce up. And I almost added here. I had the limit order here, but didn't touch it. So if it will go against me, like always, I will add more to my positions. Eventually, if you keep it in the boundaries of your risk management, then everything is fine. The bad stuff will happen when you cross in those boundaries, right? So it's okay to add to your position, and it's important to add to your position, even if it's a losing position, as long as you're within the risk parameters, you'll be fine. So hopefully it will go against me and take some of my limits and then drop.
Can you run us through exactly what you mean there by staying within your risk parameters? So you're obviously talking about scaling into a position as it's moving against you, which is very easy to fall into that martingale category, right? Scaling in a martingale can often, they can look at each other and
newbies think they're the same, but they are very, very different.
Yeah, correct. Yeah. So what do you mean when you say it's good as long as you stick within your risk parameters? What do you mean by that?
Yeah, because you obviously have a dollar risk that you're willing to lose on a trade, right? And as long as you're within that risk, $100 that you're willing to lose. So once you started to scale into your position, and again, this is Forex, so it's a bit more tricky for me to calculate it and everything, especially on a 1 minute chart. But generally speaking, if you have $100 that you're willing to lose on a trade, you need to cut it to few chunks and then risk $30 on the first execution, then another 30 on the second execution, and so on. So once you saw that you reached that $100 loss, then you're out of the game.
So you're really looking to average your entry, essentially. So just in case you didn't get that entry that you really wanted, you have the option to be able to average that down.
Exactly, because it's not a martingale when you double your entries and stuff like that. It just add into your position to become 100% of a position, basically.
Beautiful.
And of course, since I don't really know how to time the market right on the point, then and you shouldn't, then I can add more to my position as long as it's within that area that we saw previously on the hourly chart. So this is the area, right? It could be the tail, it could be maybe a this tail. So we're playing around this area and not trying to, catch it right on the point. So that's the idea.
Beautiful.
Yeah, so this is dollar yen, dollar CAD, roughly the same. So on an hourly chart, we reached a nice place. I believe also from the historical part. So you had nice resistance coming from the bottom to a nice resistance. Makes sense that the price will drop even a bit lower to those numbers, like 132 something, and basically that's a good place to build a position. I don't know if it will work in the next, like 30 minutes or so, or 40 minutes that we have, but basically, again, just adding liquidity as soon as it will pop against me. Already add one, and this is the second one, right? If I'm not mistaken.
Yep.
Yeah. So again, if it will continue against me, we're still in that range that the price might drop. So it makes sense to add to that position. And if not, if it will go right to basically continue to my favor, then I will have to find some ways to add more to my position, right? So for example, if it will drop here, then I'll wait for it to retest this area, like this area, and then I'll add more to the position, right? So that's the idea here. Any questions from the audience? Yeah.
It's very interesting to how differently people trade. It is really interesting. Everybody's got their own way of looking at the market, own way of entering in the market. Some people may be similar, but mostly everybody is they've got their own different techniques of getting in and out. And I know Saul does the same thing with laddering into trades.
I guess the idea, the concept is pretty much the same. You want to buy support, you want to sell resistance, stuff like that, right? So the only difference will be the way that you manage the risk and manage the trade, right? If you're scaling in, if you're taking it all in one chunk, if you're putting your stop losses in as a hard stop or not. And obviously, how do you take your partials out as well? If you're covering all at once or you're taking some chunks along the way.
I think I'm pretty confident in saying this, Alex. Call me out if I'm not, but I think this might be the most structured approach that we've had a trader take.
Yeah, I was thinking about that earlier because it was like nobody's going crazy. Everybody's just staying cool.
It's very passive.
And higher time frames as well. Like, everybody else has been on 1 minute, getting in and out, but you guys on higher time frames looking for a bias.
So you want us to go wild?
No. This is up to you.
You can go on the 1 minute and put 10 lots. It's up to you.
But
so I do have them, but it's just here, right? So it's not a 10 lot, but for example, I entered here, and now if it will drop down, I will add more to my position. It might be those 3 lots, just because I'm not used to trading lots, right? So I don't want to blow the account, but as soon as I'll see that it's going to my favor, then definitely it can be aggressive. And that's also, if we're talking about that, we can maybe elaborate a little bit about that, because once you find the right trade for you and the right setup, then you gotta be in the aggressive mode, right? Because a lot of the traders are getting into a trade, and the first thing they're thinking of, how do I take my partials, or what do I do? How do I cover? Let me get out of that trade, take my profit and leave. But in our case as traders, we gotta see the opposite. So once you got into a trade, you gotta think, okay, how do I add more to my position, and how do I make this trade a bigger trade, right? So you got to become more attack, move from defensive mode to attack mode.
I feel in an asset like crypto or maybe stocks, it's easier to do that because it's very directional, it's very trendy. Whereas Forex, it has its times where it has like these little intraday trends, but it's so rangy. You start adding in, and then suddenly it goes back, and you know it's. I think it's more of a difficult market, and that's why I think you got to understand which market you're trading. For somebody like you that is used to getting into stock trading and getting into more intraday trends, it'd be interesting to put that kind of concept into being really aggressive in an intraday forex pair. That's interesting to see.
Yeah, but we need to remember that the forex, even if it's ranging, still got. If you took the right asset, you still got enough. You should have enough space for the upside. Let's say, so you bought it at the bottom, at the dip, then added more along the way, until it will reach that major range.
When you add, are you adding smaller risk as you go along? So let's say you had your first entry, it was like one lot. Then if you're adding in, let's say it's going up, you're in a buy, and you're adding in. Are you taking smaller lot size as it rises, or you
usually will be the same? Usually will be the same.
Okay.
But again,
it's
been more.
I find that so interesting because it's opposite to the way I do it. Whereas the way I go in when it comes to aggression or defensive, it determines on my position sizing, not necessarily how I'm trading the trade. It's more of how much I'm risking, right? On setups that I'm iffy about, I'll lower the risk. I'll risk less on. Whereas if I've got those setups that I'm happy with or quite confident in the way that it's set up, I will go with a higher position size, all within a procedure, right? But I think I would struggle to add to my winners as it was going my way, averaging, because I'm very quick at scaling out. I'm very quick to scale out, like you've mentioned. Now that I've shown to me that that's actually one of my edges, being able to get out, because the way I was trading mean reversion, I'm not aiming for a big move this way. I'm aiming for essentially a little pullback. So I need to be reacting to get out. But I'd really struggle for that. How would you go about someone? Because in theory, you're averaging your entry to almost a worse entry point, especially if it flips. You could have a really great trade that's gone 10%, for example, and make nothing on it because you added at 5 to 6% in gains. How would you battle that bit?
So let me answer two things. First of all, the first thing that you mentioned, that you're doing a quickie on those trades.
On those trades, everybody, we're talking about trading.
Only those trades.
Only trading.
That's what we're talking about. So anyway, I would challenge you to test that and try to focus on not taking the pullbacks, but try to focus on finding those reversals, like the real reversals. Obviously, from time to time, you will take those pullbacks from that. Let's say it dropped, and then you took the bounce up, the first bounce up or whatever. I would challenge you to try to focus on taking the real change in the direction of the market. Once you do that, you will have a lot more space to add to that position, and you won't feel that you need to go out, as quickly as right now you do. And obviously, your risk management will be, like, the risk reward will be much higher, and you will feel, at least in my opinion, more confidence in your trading. That's my own experience, because I used to do a lot of pullbacks as well, and just taking that small win, not necessarily in dollars, but in percentage wise or pips dollar wise. But as soon as you let go of those, because when in most cases you will know that it's a pullback and not a full reversal, right? So once you let go and wait for that big real moment, it's easier to add to that trade, because you know that the chances that it will go to your favor are much higher. And regarding the second one that you mentioned, that's the same idea basically, because once you took that major reversal, like the real reverse, right? Then you know that you have, obviously in most cases, you will have more space to add to that position and not feeling scared or, mostly fear from that flip to the other side. Because the idea that if that is that trade, the main reversal, then it should go higher, then it will pull back, then it will continue to a new high, etc. Right? It will create a new trend basically. So it will be much easier for you to add to your position, even if it's going to your favor, because you know that the chances are that it will continue. That's the concept.
Fascinating. Yeah, I'm intrigued.
Are you going to change your strategy right now, Jordan, after all of those years of...
No, sorry, but no.
After all of those years of testing?
No, look, it's something I've thoroughly tested and thought about over and over. I personally, I like getting in and out of the market quickly. I don't like being exposed to long moves. I've always struggled with, and I think the main difference, well, Mickey, you still might only be exposed for 6 hours or when the stock market's open. At least the volatile times where you can get these moves and the pulsating one, I mean, it begins maybe 9 p.m. my time, finishes around 4 a.m. my time. So trying to catch those big reversals where all the order flow comes in and happy days. I like sleep personally. Hence why I went to catch those smaller moves, because we usually get those smaller moves, right? There's nothing big being played. So I structured a lot of my trading around that. I will challenge myself and I will have a look into what you said there to see, but I have found previously that my most successful positions and the ones that really carry the P&L were the ones where I was very quick to react, were the ones where I scaled down very successfully, rather than the ones that I held on a little bit longer were the ones that either hurt or come out at break even, which I found very interesting, which is when it comes to confidence, I'm more confident reacting in the position at that point in time, kind of the way you do with scaling in, only I'm looking to get out. Now, yeah, there might be an element of fear of losing with it turning back round, and because I'm trading against an overall trend, there's a good shout that it will turn around and go back against me. So I'm trying to be reactive with that as well. But it is something I'm gonna have a test and have a look into.
If you were trading London session, then I think that would be valid to test it out and stuff. But because you're in a session that there is lower liquidity and it is more rangy, to get in and out is probably just like the better idea, to be honest. I wouldn't want to be trading in your session, to be fair.
I used to think that, but you get used to it. Anyway, we've just crossed 30-minute mark. Right, let's get up to date with what we're looking at P&L wise. We've been distracting, we've been talking. Mickey, give us a run in. What's your P&L right now? What's your equity?
I guess 50s. Added more 2 minutes ago here. A little bit, just a tiny bit late than what I wanted. I wanted to catch that bottom, but it basically jumped very fast. Still on the dollar CAD, added 2. Still waiting for that extra pop to the upside so I can add more to that position. And I got 2 lots on the dollar yen. One was beautifully taken from here, from one of the limits order that I placed before. Now it's dropping. Yeah, let's see what will be.
Beautiful. And T, I'm going to come over to you. What are you looking at? Oh, a bit more aggressive. Look at this.
Yeah. For me, my overall idea to begin this morning was a bearish outlook on the dollar, for short term anyway, at least. So all the trades I've taken have been with the expectation. So dollar yen, as Michael said, he's shorting. I'm shorting the same. So I'm long EU, GU, and AU as well. At the minute, it's more or less hanging around entry But I'm hoping if there's an aggressive move from the dollar downwards, then all my trades should align and give me the blues. But if there's a reversal, then that will trouble me for this competition.
I like that. Give me the blues. Now, what is your euro? So you're long euro US dollar.
That's correct.
If I'm not mistaken, there's someone else just before we started recording that said he went long euro US dollar, right?
I am long euro US dollar as well. Yeah.
How's that going?
Well, it was a buy stop, so I would have got in by now. Let me just have a look on the 15 minute. Yeah, look, it's in profit. I'm looking for it to take out the top. So it's had a nice push up, retraced down, hit a 200 EMA, a fib zone. I'm just looking for the continuation now to take up that prior high, and that's it. That's me out, to be fair. So that's one of my.
When you say prior high, are we talking yesterday's high? Like what time frame are we talking here?
So on the 4th, if you look if you're on the 15 minute.
Yeah. Sorry,
Friday. That's where I'm looking at. So basically, T's in pretty much the same kind of trade as I'm looking at. That's what he's looking at. I'm in the same kind of trade. So looking for it to take out that high.
It's been 30 minutes. We have a lot of volume on these accounts being traded right now. Both traders are still break even.
Like, do you know that is the problem when you go in on so many different pairs at the same time. And the problem that I've always seen, when I've always seen, every time I've gone into multiple trades in multiple pairs, one is doing great and the other one's doing absolutely shit. Sorry, I shouldn't have said shit right now, but you're gonna have to block that.
That's good.
Out.
You double down on it. So
beep beep. But yeah, that's just the thing. That's why I like focusing on just one pair. If I've got a bias for the day, I'm just gonna focus on that pair. If I'm wrong, I'm wrong. And unlike Mickey and Soul and that, I have a fixed stop, a fixed entry, and a fixed take profit. And if it wins, it wins. If it doesn't, it doesn't. And I'm in for one trade a day.
I hate that.
Well, there you go.
I hate it.
I'm trade like me. I'm the only trader like me.
I saw Mickey. I saw you shaking your head as well.
I know. Do you know why he's shaking his head?
Yeah.
The amount of times that Mickey has spoken to me about all of this stuff, and to be fair, some of the stuff in the past, I've passed many times the prop for the fivers for programs using some of the techniques that Mickey and Soul have shown me. That's just not the way I like to trade. I don't like trading like that. I don't like breaking up my position. I prefer getting it into a fixed position, fixed stop loss, and fixed take profit, and then just forget about it. Otherwise, I start playing with stuff. Gosh.
I know there's some part of you that's...
I mean, it's just a matter of time, Alex. It's just a matter of time.
Just a matter of time, man. We'll see. Now I'll put it all out into the internet, and now you can go back and just see if that euro dollar trade actually completed, or if it hit my stop loss. We'll see. It. Yeah, man.
What else?
It's just quite interesting watching two people in two different ways of trading. I always enjoy it's very interesting.
Actually, I entered the dollar chief a few minutes and a half ago.
Dollar chief?
Dollar chief?
Dollar chief?
Dollar Swiss?
Dollar Swiss franc, yeah.
Yeah, you got to call it the Swissy.
I'm sorry, that's not familiar with your terminology, guys.
You had him then. You almost had him.
Yeah.
So, waiting for it to drop a little bit more. We'll add more liquidity as soon as it will pop, if it will pop against me.
You are diverse. You're looking better than my long-term portfolio here, Mickey. You are diverse.
Mickey's in for the long term. He doesn't care that it's only a 60-minute contest. He is looking for
20 minutes trading to go.
Just Just tell me when it's going to be like 10 minutes before the end, and I will start.
You've got 20
minutes.
In 1 minute.
It's 20 minutes from now.
20, that's fine. Give me the 10, and then I'll go buy it.
Yeah, playing the duration game.
I do want to ask though, Mickey, what is your like outlook of how the stock market and everything is actually going at the moment? Because we've seen stocks going crazy, the S&P in a really interesting place, where people are saying that it's overstretched or overextended. What's your outlook on it? Obviously, I know you're a day trader and you don't really care, but you obviously have a little bit of an insight, I'm sure. So what do you think?
So I don't care.
Every time I ask this question, he's like, yeah, don't care.
Okay. No, but in all seriousness, a lot of the guys always, like, it's in the media, that's the idea of analysts. That's they're supposed to analyze, they're supposed to give it to the market, give it to the media, and those guys will post it and try to create either a good vibe when everybody is in a mood to buy the stocks, right, to buy the market, or the opposite, try to add panic to that equation. So today the market is very obviously made a very extended move, but a lot of the guys are trying to piling in and still buying it. I see it on the news as well, that they pumping it and saying it's going to be better, so the market should continue and there are no alternatives and stuff like that. And once it will peak, and we will have crazy news coming in, then we should see the drop that everyone is waiting for. But at the moment, the market should continue higher. I mean, in the long term, right? Perspective, yeah. So
talking on a long-term perspective, are you interested in investment as a long-term perspective when you're looking into like the S&P 500? Do you dabble in that at all?
Yeah, 100%.
So, because this is a topic I've had with a lot of traders recently, is how exposed they are to their day trading performance, right? When it comes down to investment, how exposed, like if you have a bad day trading year, have you lost money investing that year? Or how heavily are you diversified in crypto or in the S&P, ETFs, individual companies? Like, do you still look at investing in these companies, or are you mainly focused in your day trading ability?
No, so I have my portfolio for investment for the long run, just buying the market every month, and looking for opportunities on unique stocks, we'll call them. Some companies that either dropped majorly but still looking pretty good, or
that's the gambler in you.
Or the next
big those penny stocks.
No, not those. I'm talking about the real companies that dropped like 50% because of whatever, and they can still bounce up because they got cash flow and they got good management and everything, but they had a rough path. And besides that, obviously the day trading part, and of course TradeThePool, taking a lot of my time. So yeah,
it's like Meta. I remember Mickey. I don't know who told me to look at Meta. It was just extremely cheap. Like a few
at around $100, right?
And yeah, it was just under. It was about 89. I think the bottom was about 89. And since then, it has just been like rocket fuel. Now I was speaking to Mickey like, only crypto. And then I looked at the Meta chart and I was just like, wow, it's so silly. Like, you can't, some stocks as well, their movements is absolutely crazy. I just got to get into like more investing into long-term stocks, because that's what my father, you know, he would put a bunch of money into a certain stock, and I know everybody, that's what they are, stocks. And you can't really go wrong with traditional assets and traditional ways of investing and stuff. So,
well, unless you're invested in 2008, but yes, sure.
As long as you're holding, even if you bought it in 2008, right?
So if you bought in
just before
2008, you're happy days.
Even if you bought it in 2007, before the drop, you'll still be up majorly these days.
Yeah, because I'm always curious to know, because I'm I'm very similar, Michael. Every month I'm getting back into the market. Whether that's at the moment, that's predominantly ETFs, and that's international ETFs as well. I'm not just looking at the US equities or the Australian equities. I'm expanding, but I did, and I spoke to Ruben a lot about it during the whole COVID drop. That was a fantastic time. I bought heavily into airlines. Especially Qantas, right? Qantas, biggest Australian airline here. They dropped absolute pennies right the way down because this whole COVID shut down the world. But airlines weren't going to go anywhere. They're not going to go anywhere. And you can see similar things when we do have some of these big drops that are relative to current times. You can talk about that fear mongering that the media wants to put forward and different ways to react to that. And I think there's beautiful opportunities, but you've just got to be patient when it comes to equities.
What's their ticker, the airline?
Sorry?
What's their ticker?
QAN. QAN.ASX.
Yeah, I remember I had
sorry, I think I'm having some issues here.
Lagging. Interesting.
I remember I had some few trades back then. And then, what's that?
No, I was just looking at the chart and sure.
Oh, you're looking at the but you can look.
We've got no way of stopping the. Oh, and he's back.
No, chill.
Magic. I was just looking at that chart, Jordan. You're telling me you were buying around the COVID time.
Yeah. I think that the average entry I got was in the low $4. I think it was. I can double check that. That Flight Center picked up a lot of Flight Center as well. There was a few different ones I got in and into the ETFs around that time, and they've been performing really well.
And are you looking at selling this, or are you looking at holding it for a long term?
Long term. So the Flight Center maybe. Qantas as a company, I absolutely love what they do as a company, their business model, their cash flow, everything. I think Qantas are a pioneer in airlines, and especially with some of the new flights and stuff that they're bringing forward, the quality. So that's something I'm going to hold on for a hot minute. And these are investments. These aren't swing trades. These are investments for a long time in the future. There's a few different businesses that I've picked up through there, but I just generally believe in. You have a look, positive EBITDA, everything like that, sure, have a look into them. But if you actually use their products, you think they're a really good service, and the books add up, grab and hold.
Yeah. Mickey, you were looking into a lot of like water companies, no?
No, not really.
No.
Maybe for the future.
There was a sector that you were focusing on. I remember you telling me about a year ago you were focusing on a specific sector.
We did talk about it. I didn't do much about it, unfortunately or not. But yeah, the guy from The Big Short. Do you remember the movie The Big Short?
Mm-hmm.
Oh yeah. The guy that got the licensing.
Yeah, so the doctor that crazy doctor that understood that it's gonna be a bubble or it's going to blow, right? Forgot the name. Sorry.
Michael. It was
Michael.
Michael.
Michael. Mickey Katz. That's the geezer.
Right.
That's the guy.
The next bubble.
That guy knew it.
So he was talking about at the end. He was talking about checking water as investment because pollution climate change, all of those things should lead to a higher price on water and stuff. Yeah. But I didn't
Have you seen
go.
Sorry, have you seen the company that sells air now, like oxygen, fresh
Oh,
air?
come on. Yeah.
You know what? I wouldn't
no,
be
I'm
surprised
not
if
that
that
serious.
would be the case.
I'm serious. They sell
What, clean
cans
air?
of fresh oxygen
I've seen it.
and
yeah.
give it to places of high pollution, but not in like this is a humanitarian aid. It's
No,
like
the
a
product.
retail business.
I would
Yeah.
love. I would love that. Waking up in the morning and have some like clean air, like a high dose of like.
Have you tried
oxygen.
opening a window or?
It doesn't work, mate. In Tel Aviv, you know, you open up the window and you got dust coming in your house.
So you can imagine. So Alex, you
Yeah.
can imagine that one day, this is what we're going to pay for. You know, just getting this
I'll
fresh
pay
air.
for it now. To be fair, you know, just like you wake up, you got your CO2 canister. You take like 2 minutes of just nice breathing of clean air. I'd pay for it.
I've just had $1
obviously.
million idea.
Oh,
Right.
here we go.
Alex, you are painting the picture of a general consumer right now. I reckon we just sit down and we talk about what you like and what you'd spend your money on, and we invest in those stocks.
That's nice. Yeah.
Yeah, I spend my money on silly things, so you don't really want to be whacking motorbikes and
Not for kids.
potentially CO2 canisters in the future.
All right.
How long have we got left anyway, George?
Yeah.
10 minutes.
The moment you've been waiting for, we're just crossing over the 10-minute mark. T, you've been lucky here because we've not pinned you, right? We had an early conversation, but other than that, Michael's distract us with his stock talk.
Yeah.
T, what's going on? How are you feeling?
Not looking too good right now.
No?
I did have a potential.
I love it the way that you say it as well. You say it so calm and confident.
Don't come to me. Don't come to me.
I did have the potential. I was up at 1% in profit on all positions at a particular point. Let me see. When I was up to about here, I was up to 1%. It gave me options to take out some of my winnings, which I chose to sit on, and I didn't cover up the positions. And unfortunately, looking at the dollar index, it started to push up. So it's now pushing up against all my positions. So I'm in a tight spot. I'm probably going to have to Casino Royale for the last 10 minutes, which is not preferable. But my main idea for the day or for the morning session is now countering in relation to the dollar. So I'm in a tough situation. I can ride out the initial idea and hope for one more boost from the dollar, one more decline from the dollar, should I say, which will put me right. This could be it. Or to take some counter action late in the day and try and secure something. So that's what I'm dealing with at the minute. I might be lucky. I might get a little rally in the last 10 minutes or so. If not, then I will have to put in some countermeasures as we speak.
Well, let's hope that happens because I'm in the same trade as you, my friend.
And Mickey, how are you feeling?
Yeah,
I'm still break even.
I'm break even at the moment. I had a moment that I reached like 250 or so. But basically break even right now. Just added a little bit more to those positions. But yeah, let it ride for the next 10 minutes or so.
Mickey's opened every single asset he has access to and just gone buy sell.
It's only 3. What do you mean? The UK, Euro card, dollar card, chief, and yen. That's it. Simply. I mean, I just find those, the levels. It doesn't really matter if it's 1 or 5. Just find those levels, the setups, and you go in. As long as you have.
So it's going to be. Look, all you've got to do, T, is end in a little bit of profit at this rate, and you can edge. You can get it over it.
Yeah, I think I might
What's
have
the-
to do that.
Do it. Wait, hold on. Do we go off balance or equity? No, of course he's got to close out at the end, isn't it? Yeah. What am I saying? Gosh.
By the way, if we're
Take
talking,
that out.
we still-
You can take that part out. We'll keep it in.
Sorry, Mickey, you were saying.
what's the PNL? T, what is your PNL?
It is 101,000 at the moment.
101,000 in profit or loss?
In profit.
In loss. Thanks. I see that.
Damn.
Okay. One thing that I can add, I don't know, it's a technical stuff, but
Yeah, give us. We want the value.
So,
get
in
DJ Khaled.
in stock trading, we use volume, right? And this is something that you usually don't do in Forex. So, and this is a crazy. I don't get it. I don't get Forex trader that not using volume. That is so crucial, and you can literally, from time to time, get those moments that you really, the haha moment when you actually understand that this is the time to enter, or this is the time where it's going to reverse. And I know that you don't have like pool volume
Real
because
volume.
real volume.
Is it?
But still, if it's a big company like the Fivers, for example, or it's better to use it, in my opinion, just to get the idea. And you can also use some other platforms and to try to compare them. But
our LPs are pretty big, so they've probably got they've definitely got a lot of liquidity. But because it's not centralized, obviously you don't know what's going on with everybody else.
With what you've just said, I could hug you. I really could. I really could. Because I use volume in my trading, right? And a majority of my trading, entries, exits, everything is influenced, even though it's tick volume, is influenced by the volume chart. And almost every time I show that in my trading, I get the same comment. How are you using that? It's not even real. But I'm like, come on. It's tick volume. Yes, don't live by it like religion. No, but you can still use it as long as it's coming from a verified source, and you can cross-analyze multiple sources and still get an idea of where you're getting volume and where you're not getting volume. And I also think you've just preached to the choir there. I could give you a big hug.
The only thing that I would use is the volume profile, just because that obviously shows, you've got the middle of the range where the most of the volume and the price action has come from, which is like a magnet.
You can see that without that indicator, though. Like you could just look at a daily chart.
You can. But a lot of indicators, why they're there to stop us from having to think too much about it. It's just that there you see it split second. Okay, that is where that area is. That's the top of the range. That's the bottom of the range. This is where the most volume of the range is being taken place. And so it just really helps. But never thought about.
Look at this.
This is
3.5 minutes. Look at the concentration from these two now. It's been all chatty, but look at them now. Look at this. The battle for bragging rights. How you feeling, Michael? You going down? Down 200?
Yeah.
That's giving T a little bit of a sniff. What's T looking at?
That's his stop.
You need a bit of a win here. You might. Oh, he's gone heavy. He's pulled out the 10 lot positions. He has pulled out the 10 lotters. He's playing the game.
Might be a little bit premature, T.
Premature
coming up soon, but we'll see what happens. This is where I'm on my. This is where I'm like
gripping,
because this is interesting to see what happens now.
This is going to be tight. Tell you what, if this moves in T's favor over the next minute, I mean, we really could be on for it. How many positions do you have?
Just instead of,
It's like a blinking.
I'll tell you this: the problem in forex trading is that it's not netting, right?
It's
crazy.
It's the same thing. Netting and hedging is the exact same thing.
No, it's not the same.
It's visually
Instead of
just
seeing
different.
one position, averaging it down, I got millions of lines on the chart.
It depends on where you're trading in the account, because you can get netting accounts and you can trade netting accounts. It's just most accounts do hedging.
Yeah, I admit it's annoying, but it's the same thing. A netting account and a hedging account is pretty much the same thing visually, where the average your average position is.
Yeah, it's just but it's just not looking right on the chart. I don't know.
Yeah, it makes the chart look very messy.
Tell you what, I'm going to close that. We've got 1 minute and 20 seconds left, and this is tight.
That's it.
Yeah. Bulls versus Bears.
Yeah. I'm going to start getting
closer as well to the final. You know, we've got Victor in the final already, and then we've got a few other semi-finals.
Yeah.
Final. We'll see.
We'll see if anyone picks up on that, but we'll leave it. We've got a few finalists lined up already. It's starting to feel the tournament's taking shape. The competitiveness is very vibrant. People are up and about. Guys.
You ready?
Sorry. We've got 35 seconds. When it comes to the last 5 seconds, I am going to count down from 5. You can right-click on one of your positions, and then there'll be an option to close all current positions, okay? You're going to have to click that when that 5-second count is down. Now, I'm really interested to see Michael do that because he's got about 1,500. But all right, guys. Alex, who do you reckon?
I'm with T on this one. Just after seeing Michael's long-term hedging strategy, I think it is just an interesting way of trading, but not for this competition.
5, 4, 3, 2, 1. Close all positions.
How do you do that?
Right, look what's happened. If I'd waited a few extra seconds, it could have changed the result. But
Nicky, close your positions. Come on.
I'm trying.
He's still going. Oh,
he's got about 1,500.
Oh no.
I will close on it.
On MT5, there's a way that you can close everything all at once.
You can?
There is.
Yeah, you've got to use the menu button.
Right. Yeah.
And it says close bulk operations or bulk operations.
Bulk operation.
That's what you get when you bring a stock trader onto MT5.
Yeah.
All right.
What does this button do?
All right, Alex. Who do you want to see first?
Okay, let's go T, because Michael obviously had a little bit of I don't know if all of his positions are closed. I don't know.
He just opened 20 lots.
Oh god. Let's go T first, because I reckon T.
Run us through. What's your final P&L?
My final, it's a minus, unfortunately, but the total is 99,753. If we had waited till now, it would have been a different story.
So you went in for a short after. Yeah.
Unfortunately, there was a point I was at 1,000. I was at 1%, so it was at 101,000 in equity when price was up at this point here, which normally I would have taken some counter action, closed off for a couple of positions. I should have closed off the EU because they were pretty large at that time. Obviously, I chose not to, and ever since, the dollar index is reversed and it's showing some extra strength. And my other positions, when I closed out, I did take the opposite side of the positions with some larger positions, which is now showing potential strength. Same with UJ, as you can see. So I'm down $250.
Hey, that's putting you
Not
in
bad.
for an hour confined and risking a fair bit. That's a good effort. That's a good effort. It really is. And sticking to your strategy too. Let's get to what we all want to know. How bad did you cheat, Michael?
3,000 loss, something like that. Yeah, 4,000.
How did you get into a 3,000 loss?
Because like the last minute, I just added more and more. I don't know.
Where did a 3,000 loss come from? I saw you were up $50 at one point.
Yeah, but I added more the last few minutes.
Okay, so you stick to stock trading. This is definitely your edge is being in the stock market, I think.
Yeah,
Fair play. Well,
it was fun. Yeah.
There we go. T's victorious.
T.
Look at that.
Yeah.
Well, how'd you find it, T?
Yeah, good. Really good experience. Obviously, when you're in the hot seat for 1 hour, it changes the way you'd normally trade. In the sense of you feel that you have to push the line a little bit further. You have to let the profits run. In a sense, I could have banked the 1% and then gone again, which was an idea I had in mind at the time. But I didn't know what Michael was doing, so hence why I was like, let me keep it open. And it turned against me, which put me under more pressure. So that will have to be an idea going forwards. Do I bank when I'm in profits? Do I take something off the table and then carry on refreshed? Or do I get back into that situation? So that's a learning opportunity.
Everybody says the exact same thing, by the way. So you're exactly in the same position. It's very emotionally challenging. It's challenging your emotions big time, this one. But that's why it's good as well. It's really interesting to see how people work under pressure. There you go.
Mickey, how'd you find it?
Yeah, first it was fun. I mean, but you know what? Yeah, it was a great experience. Like I said, I didn't trade Forex for a while, so it was nice to be back, I guess, but also not to. Because, bring me the next time you do some stock. And
yeah, no, definitely.
I promise I'll do better.
There's going to be a bull versus bears for the stock market. The only thing is, can you really see that much movement in 60 minutes, or maybe after one?
We can do the open.
Yeah, if we're doing it, exactly.
Pre-market into the open.
Yeah, 9:30 Eastern. We will have lots of volume, and we can definitely trade that for 1 hour.
Season 2. We know what's happening.
Hey guys, Jordan here. Just wanted to send you a personal little thank you for sticking around and watching us here at Trade Delicious. If you did enjoy the content, consider subscribing. Everything we do here is completely free. And of course, we have some other video suggestions here which you might love. We will see you in the next video.